The engine of the modern global economy runs on a specific fuel. It is powered almost entirely by debt, interest, and leverage. For the world's 2 billion Muslims, this creates a theological tension. Islamic law prohibits the concept of riba, or interest. The prohibition exists because interest is viewed as generating wealth without creating real societal value. It allows money to increase merely by being lent, often exploiting those without a financial safety net. This creates an existential dilemma. For an investor who refuses to participate in interest-based systems, building long-term wealth becomes a problem of navigation. The solution is a parallel financial universe that systematically cleanses the chaotic global market data. This is halal investing. This system requires running the entire global market through a multi-layered screening process known as the Sharia filter. To understand what survives this process, we have to deconstruct the math and the logic behind each layer. The Sharia filter provides the mechanical structure used to isolate this specific form of capital. The first layer is the business screen. It eliminates companies based on the specific nature of their revenue. This chart represents a corporate revenue breakdown. If a company derives more than 5% of its operating revenue from prohibited sectors, it is discarded. The exclusions begin with commodities deemed harmful, such as the mass production of alcohol. It removes companies profiting from the sale of tobacco. It cuts out the business of gambling. And it eliminates the manufacturing of weapons and military equipment. Under Sharia law, a company's operational ethics do not matter if the underlying commodity it sells is considered a cause of societal harm. A tech company might pass the business screen easily, yet still fail the filter. This is because the financial screen polices a company's balance sheet for excessive debt. This balance scale visualizes the first mathematical threshold. A company's interest-bearing debt cannot exceed 33% of its 36-month average market capitalization. Cash and short-term investments are held to that same 33% limit. Finally, accounts receivable cannot exceed 49% of the market cap. These ratios are the mechanism used to ensure an investor does not indirectly profit from interest-bearing activities. Fixed income assets require a different structural approach. Conventional bonds are prohibited because they represent a debt obligation paying fixed interest. The Sharia-compliant alternative is sukuk. This comparison shows the distinction. While a traditional bond is an IOU, a sukuk grants the investor partial ownership of a tangible asset. Returns are generated from the actual rent or profit of that asset, meaning the investor shares in real risk. The principle of gharar, or excessive uncertainty, also outlaws speculative practices like short selling and derivatives. Even when a stock is compliant, the investor must monitor it. If it later takes on too much debt, a 90-day grace period is triggered to exit the position. Islamic finance requires sharing actual economic risk, rather than profiting through the certainty of someone else's debt. In an interconnected global economy, achieving 100% financial purity is mathematically impossible. A compliant company might temporarily park its cash reserves in a standard, interest-bearing bank account. As a consequence, this generates a tiny fraction of forbidden income that will inevitably enter into the investor's broader portfolio. The final phase is purification, the mandatory cleansing of unavoidable forbidden income. This dashboard illustrates the process. The investor must calculate the exact percentage of non-compliant revenue generated by their shares. These specific dollars must be physically extracted from the investor's profits and donated to charity. This specific donation yields no religious reward for the donor. Purification is an act of spiritual hygiene rather than generosity. It is used to rid the wealth of sin. Halal investing is a vigilant lifestyle. It demonstrates how specific principles can navigate and grow within modern capitalism.